Welcome to Alive with Amanda. I'm here today to talk about something that I might lose some of you, and I totally get that, which is how much do I set aside for taxes and how do I plan for taxes in 2020? So it's the beginning of the year. We're just now getting all of our tax documentation in. We are maybe writing out all of our tax documentations for our clinicians, for our contractors. We're getting information out there and we're getting prepared to file our 2019 taxes. But that doesn't mean that you can let it slip and that you just forget about your 2020 taxes. You want to make sure that you're preparing for taxes at all time, right? What does the saying go? There's only two things guaranteed in life, death and taxes. And so when you are in private practice, I hope death isn't a part of that, but taxes are. So here's the exciting thing about taxes, that when you are paying taxes, that means your business is probably doing pretty well. There's not a loss. You're paying yourself. Your business is doing good. So I want you to get used to paying taxes. I want you to get comfortable with the idea of paying taxes. Now, I don't want you to pay too many taxes. So that's why it's going to be really important for you to go ahead and talk to an accountant. Make sure you have your accountant on speed dial. So then that way they can answer any questions that you have with them about your taxes. So how much taxes you put aside is really going to be dependent on really how much money you're bringing in, how your business is taxed, whether you're an LLC or you're an S Corp. But a general rule of thumb for those of you that follow Profit First is 15%. So if you have a group practice, that's 15% after you pay your independent contractors. That's going to be also after you pay your employees if you have a different model, depending if you have independent contractors or you have employees. So here's the thing. You want to make sure that, so if you're a solo practitioner and you're bringing home $5,000, or you're bringing in $5,000 a month, that you put aside 15%, which is $750. You put that aside in another account for taxes. And so if you pay your taxes quarterly after 3 quarters, you'll have $2,250 to pay towards your taxes. If you save that up over a year, I'm not going to do the math right in front of you, but you get the idea. You're going to have a little under $10,000. So you want to make sure that you are putting aside enough money for taxes, but you're not overdoing it because then it's going to bite into things like the owner's pay or your expenses. So again, if you're following a profit first model where money's brought in, 50% of the pay goes towards the owner, 30% goes towards expenses, 15% goes towards taxes, and 5% goes towards your profit. And so maybe you don't follow that. Maybe your accountant told you, listen, you don't really have that many expenses. Your expenses are really low. You're going to need to save about 25% in taxes. You definitely want to listen to your tax professional because they're going to be the one that is the expert. So I want to take a time to shout out our other expert, TherapyNotes. They are an expert in electronic health records and making sure that you have everything you need to run a HIPAA compliant practice through an electronic health record. You can write your notes there, your treatment plans, termination notes, send your paperwork for clients to sign, you run your billing. There's so much that you can do through TherapyNotes. If you're trying to find a tax deduction and you're trying to make your life simple, definitely recommend checking out TherapyNotes for your electronic health record needs. So let's go back to taxes. So you want to make sure you are putting enough money aside because the worst feeling in the world is when you haven't done that. I've been there. You see, I can feel it in my gut. I have not put enough money. One year I had made more money, which is a blessing. I'm so grateful, but I didn't put aside that money for the tax hit that I got. And I had to pay money to the IRS pretty quickly. The IRS doesn't play. They want their money. They want their money soon. A lot of the times they're kind of funny about making payment plans. So depending on, how much you owe, what it is, you may have to pay that up front. Again, talk to your accountant. And you don't want to be caught without having that money, or at least having that plan. When I had to pay it, I had the money. It was there, but there were other things that I probably wanted to do with that money, and it was okay. I paid it, but I learned my lesson. I better accounted for in the next years. And then in the subsequent years, I made sure to make enough in my quarterly payments in order to not be hit at tax time with a large tax bill. So sometimes there are things that you maybe can't control around that, or you get a lot of payments maybe in December. You're not really sure some of the things that go along with that. But that's why it's really important that you do tracking. You track your income, go over that income on a regular basis with your accountant so you can make sure that you're on track to not get hit with a huge tax bill, because I know what that feels like. Nobody likes it. I reframed, I used my skills to say, yes, the business did well. So this is why we put so many taxes. But I wanted to be prepared, and I want you all to be prepared, because I think that's the best policy. So if you have any questions about private practice, money, taxes, ask your accountant about the taxes. But if you have any practical questions about, private practice, please go ahead, send me an email to amanda@amandapattersonlmhc.com. I am here every Tuesday and Thursday at 3 p.m. Eastern Standard Time. I know I have a lot of people who watch from other places, so I look forward to seeing you in just a few days' time. Bye, everybody.